So we were real pleased last week when President Obama signed the Highway Trust Fund bill into law because it had three provisions that were important to credit unions. It modernized privacy notification requirements. It set up a process at the CFPB for rural areas to be designated, and then also it made privately insured credit unions eligible to join the Federal Home Loan Bank. All three of these provisions are going to help credit unions in different ways. The privacy notification provision is probably going to have the biggest impact on credit unions because it's going to positively impact almost every credit union's bottom line. You're not going to have to send the annual privacy notices to your members if you haven't changed your policy. And that's going to save a lot of expense on mailings and postage and things of that nature. Credit unions since 2001 have sent more than 1 billion of these mailings, and so now it's going to be put into the hands of the credit unions to decide, do we need to update our privacy policy, and if so, we'll send the notice then. The rural designation bill is going to be very important for credit unions serving in areas that haven't yet been designated as a rural area by the CFPB. Having that rural designation gives credit unions and banks serving in those areas some accommodation under CFPB regulations, so we think it's going to be pretty important. And the third provision, making privately insured credit unions eligible to join the Federal Home Loan Bank system, is really important for the 150 privately insured credit unions across the country. This bill has been around for a long time. I can remember being lobbied on the legislation when I was working on Capitol Hill. It was an oversight in the 1989 Federal Home Loan Bank Act, and we've worked really hard for a number of years to get that fixed. But now, privately insured credit unions will be able to join their Federal Home Loan Bank, and this should help provide liquidity for them to do additional mortgage lending. So we're real pleased that the President has signed these regulatory relief provisions into law. We thank him for that action, thank Congress, but also we thank the thousands of credit union advocates who have worked over the last several years to make this all possible. It certainly didn't happen as quickly as we would have liked, but that's the reality of the situation we're in. We have a post-crisis Congress that has partisan gridlock of historic proportions. Things just take a little bit longer than they ought to. But with everybody's help, all of us pulling in the same direction, we were able to see this across the finish line. We're going to use the momentum from the transportation bill to try to get even more regulatory relief accomplished this year. On Friday, the funding for the federal government expires, and so Congress is going to have to enact a new funding resolution. We expect they're going to enact what's referred to as an omnibus appropriations bill. So they're going to take all of the remaining appropriations bills that haven't been enacted, combine them into a single piece of legislation. This gives us opportunity because in both the House and the Senate versions of the Financial Institution and General Government bill, we have important regulatory relief provisions, things that deal with CFPB rules like the qualified mortgage rule or the TILA-RESPA integrated disclosure. There are provisions on the NCUA budget and also on Federal Home Loan Bank eligibility. We don't know what will be included at the end of the day. Those negotiations are taking place at the highest level at the White House and in Congress. But we're hopeful that some of the remaining provisions that weren't enacted as part of the transportation bill can be included in the omnibus appropriations bill. So it's possible that a week from now we'll be talking and we'll have even more regulatory relief enacted into law. Even with the regular relief provisions we were able to get enacted with the transportation bill and what we hope will be a very positive outcome with the omnibus appropriations bill, we're still working to get Congress to pass more regulatory relief for credit unions. And this Tuesday, the House Financial Services Committee is going to consider two credit union bills that we support. The first is H.R. 2205. It's the Data Security Act. This bill has been introduced by Representatives Randy Nagebauer, who chairs the Financial Institution and Consumer Credit Subcommittee of the Financial Services Committee, and Representative John Carney of Delaware. And what this bill does is it says anyone who handles highly sensitive personal identifiable information ought to be using the same standards that banks and credit unions have to follow. We think it's going to improve the security of our payment system. It's going to improve consumer protection, and we're strongly supportive of H.R. 2205. The second bill is H.R. 2287, the NCUA Budget Transparency Act. This legislation has been introduced by Representatives Mick Mulvaney of South Carolina and Kirsten Sinema of Arizona. And what this bill does is it would require NCUA to hold an annual hearing on its budget and to take public comment on its budget. This is important for a number of reasons. First, coming out of the financial crisis, the NCUA budget continues to increase while the budgets of other banking regulators are decreasing. And that causes a great concern. But there have also been some recent questions that have been raised regarding the transparency of the agency's budget, particularly as the agency moves to delegate authority over the overhead transfer rate to the Office of Examination. Finally, given that almost all of the agency's resources come from credit unions, it is more than reasonable that those that fund the agency ought to have some input in how the agency's resources are used. And so that's the goal of the bill, is to provide greater oversight over the NCUA budget, provide credit unions a greater opportunity to weigh in regarding their concerns on the budget.